Welcome to The Explainer. Today, we're unpacking what has to be one of the most fascinating and honestly complex quarters in recent enterprise software history. We are looking at Cloudflare's totally wild Q1 2026. This was a quarter marked by a massive earnings beat across the board, which was then incredibly followed up immediately by a shocking structural pivot and a 20% workforce reduction. It is this crazy story of high-growth demand colliding head-on with an aggressive AI-first reset. Okay, let's dive into this. Here's our roadmap for today. First, the Q1 earnings paradox. Second, the AI-first reset. Third, ActEV and Void Zero. Fourth, scaling to $5 billion ARR. And finally, valuation and verdict.
All right, Section 1, the Q1 earnings paradox.
So right out of the gate, this quarter presents a massive central tension. On paper, Cloudflare appears to be firing on absolutely all cylinders. Revenue hit $639.8 million. That's up 34% year over year. Adjusted earnings per share easily beat consensus estimates, and enterprise customers spending over $5 million annually grew by a whopping 50%. So the fundamental takeaway here, demand is absolutely not the problem.
But in literally the exact same breath as that massive earnings beat, Cloudflare announced a 20% workforce reduction. They cut roughly 1,100 employees across the entire company. You have to understand, when a company is growing top-line revenue at 34%, you almost never see a layoff of this magnitude. It immediately caused whiplash for basically anyone following the stock.
To put this chaos into perspective, let's just walk through this timeline. On May 7th, they announced the earnings beat, right alongside those 1,100 layoffs. The very next day, May 8th, the market absolutely panics. Investors sold first and asked questions later, sending the stock plummeting 24%. But the dust started to settle over the next few weeks. On June 4th, they strategically acquired Void Zero, and then by June 9th, at their investor day at the New York Stock Exchange, they pulled back the curtain on a massive $5 billion revenue target and a brand new strategic direction. So the market's initial panic eventually gave way to this much grander, strategic Act 4 reveal.
Moving on to Section 2, the AI-first reset.
So, if market demand wasn't the issue here, what exactly was driving these massive cuts? Well, management explicitly stated this was not some desperate cost-saving measure to preserve cash. Instead, they framed this as the largest single organizational action in company history designed to actively embrace AI. They are basically transitioning the entire company to an agentic, AI-first operating model. The goal? To structurally increase employee output and efficiency across the board. CEO Matthew Prince offered a really fascinating insight into this. He argued that AI is already heavily embedded into their operating model, saying, engineers use AI coding tools, AI agents handle support tickets, compliance reviews, and code review, and output per employee has risen. The logic here is super bold. Because AI tools allow fewer people to handle the exact same operational load, the company can essentially reset its baseline workforce. And crucially, they actually excluded their quota-carrying sales reps from these cuts, which means they intend to keep sales growth accelerating while leaning heavily on AI for all that back-end support and efficiency. Let's move to Section 3, Act 4 and Void Zero. Now, to truly understand this reset, we really have to look at the underlying product strategy. Cloudflare describes its business evolution as 4 distinct acts running on a single global network. So, Act 1 was application services. Think basic security and content delivery. Act 2 was Cloudflare One, their enterprise SaaS security suite. Act 3 introduced the Workers Developer Platform, which let developers build serverless apps directly on their edge network. And that brings us to Act 4, the Agentic Internet. This is a brand new monetization layer designed specifically from the ground up for AI workloads. And let me tell you, they are moving aggressively to secure the ecosystem for Act 4. Remember that June 4th date? Cloudflare acquired Void Zero, the team behind the wildly popular build tool called Vite. Vite essentially helps developers build web applications significantly faster. Strategically, this is just a brilliant move. It pushes Cloudflare much earlier into the developer workflow. Instead of just being the platform where you deploy code after it's totally finished, Cloudflare is now embedding its infrastructure near the very first line of code a developer writes. And when you consider they added roughly 1 million new developers to their platform in Q1 alone, well, capturing this ecosystem is absolutely critical for Act 4's success. Which brings us to Section 4, scaling to $5 billion ARR. At that June 9th Investor Day, management directly tied this new product architecture to some massive financial ambitions. And this brilliantly illustrates the endgame. By expanding into Act 4, the Internet of Things in 5G cellular, Cloudflare expects its total addressable market, or TAM, to dramatically expand to $329 billion by 2028. They are basically building a giant toll booth on the future of the internet. And this massive TAM expansion is the fundamental baseline supporting their new long-term target of reaching over $5 billion in annual recurring revenue.
But here's the kicker. They don't just want to be bigger, they want to be incredibly efficient. In the SaaS world, there's a benchmark called the Rule of 40. That just means your revenue growth rate plus your free cash flow margin should equal 40 or higher. Cloudflare has already cleared that hurdle for 22 straight quarters. But armed with the efficiencies gained from this AI reset, they are now targeting the Rule of 50 by 2027. They want to combine that historic 30% growth rate with a significantly improved free cash flow margin.
Finally, Section 5, Valuation and Verdict.
So the big question, does the reality of their current financials justify the market's ambitious pricing? When you look at the valuation, the premium is pretty stark. Cloudflare trades at roughly 28 times forward enterprise value to revenue. Now compare that to peers like Akamai or Fastly sitting at around 4 times, or GoDaddy at under 3 times. It's clear Cloudflare is playing in a league of its own. It's trading at roughly 8 times the peer average. Why? Because the market is pricing Cloudflare not as some basic hosting or bandwidth business, but as the foundational, programmable infrastructure for the entire AI era.
So the crucial point is really how you interpret all this data. We can pretty objectively lay out 2 competing views here. The bull view sees incredible AI operating leverage taking hold, a massive influx of 1 million new developers, and a TAM expanding rapidly enough to easily support that $5 billion target. On the flip side, the bear view points to immense execution risk. I mean, ripping out 20% of your workforce, 1,100 people, that creates real, tangible friction in customer support and engineering. Plus, the company remains GAAP unprofitable, and gross margins have compressed down to 72.8% as their product mix shifts more toward those developer tools.
Which brings us to the ultimate question you have to ask yourself as you evaluate this company's future. Will Cloudflare's Act 4 AI monetization engine generate high-margin revenue fast enough to justify this massive 28x premium? Or will the sheer operational friction of a 20% workforce cut ultimately derail the network's momentum? The next earnings report is going to be the absolute critical checkpoint to see if this AI-first gamble is actually paying off. Thank you so much for joining me on this explainer, and keep learning.